Hi everyone, welcome back to Corporate Decoder. Today we are diving into a company that just announced a move that could either be a stroke of genius or a sign they are trying to make their stock look more attractive than it really is. We're talking about DeFi Development Corp and their plan for a stock split. Let's get right to it. DeFi Development Corp, formerly known as Janova Inc., is planning a 7-for-1 forward stock split. Essentially, they are going to take each existing share of their stock and turn it into 7 shares. Think of it like cutting a pizza into smaller slices. The pizza is still the same size, but you have more pieces. Before we get started, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. Come join us. So why would a company do this? A stock split can make the stock more affordable for smaller investors. If a stock is trading at, say, $70 a share, splitting at 7-to-1 brings the price down to $10 a share. This could attract more buyers, potentially driving up the overall value of the company. To make this happen, DeFi Development Corp needs to amend, which means change their amended and restated certificate of incorporation. This is like updating the company's rulebook with the state of Delaware. They plan to file this amendment around the middle of May. The good news is they do not need to ask their shareholders to vote on this change, so it should be a fairly smooth process. The key date to keep in mind is May 19th. If you own the stock on this date, also known as the record date, you will receive 6 additional shares for every 1 share you already own. The company is expecting that after they file this change, every shareholder will get their new shares. It is important to note that this split will not change the total number of shares the company is allowed to issue. Nor will it change the par value of the stock. The company hopes to start trading on the Nasdaq at the new split adjusted price a couple of days later on May 21st. However, this is subject to approval from the Nasdaq capital market, so it is not a done deal just yet. Scroll exercise price of outstanding stock option scroll. This split has another important implication. It will also affect the company's stock option plans and any outstanding stock options. These will be adjusted to reflect the new share price and number of shares, which is pretty standard when a stock split occurs. This means that employees who have options to buy the stock will now be able to buy more shares, but at a lower price per share. There is one small catch. The board can change its mind, which is called abandon this stock split at any time before the paperwork is officially filed. So while it looks like this is going to happen, there's still a chance it won't. DeFi Development Corp put out a press release to let everyone know what is going on. This is a pretty standard move when a company makes a big announcement like this. They filed a copy of the press release as an exhibit, which means it's attached to this report. This press release and anything else discussed in this section of the report is not officially considered filed in the legal sense. Basically, they are saying that this information is being provided, but they are not necessarily legally responsible for every single word of it. The report contains a cautionary note about forward-looking statements. Finally, the company announced on its website that it will have a little over 2 million shares outstanding. Now let's talk about my take on all of this. Stock splits are often seen as a positive sign because, as said before, it makes the stock more accessible to a broader range of investors. However, it does not fundamentally change the value of the company. It's more of a cosmetic procedure than a real improvement in the company's health. A stock split, as we said, is just like cutting a pizza into smaller slices. The pizza is still the same size, but you have more pieces, and so this may attract new investors that might have not been interested at the old price, so this may lead to an increase in the stock price. From the point of view of the company, this is a good PR move. It makes the company seem more attractive and accessible. From the investor's point of view, it's a reminder to look beyond the surface. Don't get caught up in the excitement of a stock split. Instead, focus on the company's fundamentals, its revenue, its profits, and its long-term prospects. Alright, that is our breakdown of DeFi Development Corp's plan for a stock split. What are your thoughts on this move? Do you think it will benefit the company, or is it just a way to create some buzz? Drop your comments below. If you found this analysis helpful, please hit the like button and subscribe for more deep dives into the world of corporate filings. And don't forget to join our Discord channel. The link is in the description. Thanks for watching, and I will see you in the next video.